Hi guys, welcome back. We're back with another video, and in today's video we're going to be reviewing a trade which was actually sent in our VIP signal group, and we're going to explain the reasons behind this trade, and also give you examples on most mistakes that traders make when counting their levels. Okay, so the trade that we actually sent out was EuroCAD, and as you can see, we wanted to see a pushback up to this region right here and see the market move down here. Now I'm going to explain the reason why I had this trade idea, and then I'll also take you through the most common mistakes people make when counting their levels. Okay, so as you can see, this is what we had. Very simple. We had a peak formation down here. I mean, this was a very wide peak formation, as you can see. All right, we had that first push right into a consolidation, as you can see, and this consolidation, remember, we are looking for long sustained runs of price, and an example can be this level 1 right here. So I would not consider this as a level. This is all just consolidation. As you can see, this did take a couple of days, 1, 2, 3, and on the fourth day, that is when we could identify another push in price, right, into another consolidation, and then we had the last long sustained run leading us into that level 3. Right, so these are the market conditions that I look for. These are the market conditions that you should look for if you understand the market maker cycle. Now, for further confirmation, as you can see, we had the first leg. Right, I like the most common mistake people make, especially when it comes to these peak formations, is, yes, we all know that after a peak formation, all right, level 1 into a consolidation, level 2 into a consolidation, we expect to see another peak. But what usually happens is we'll get something like this. All right, and the reason why I would love to see something like this and something like this instead of something like this is because sometimes if you look at this type of peak formation, usually you'll get stopped out. All right, because when we're looking at this, we're looking at a multi-day formation, and these are the most powerful types of peak formation. That doesn't mean a peak formation like this will not work out, but to filter this, right, and this has actually been proven to work in the long run, right, based on my own trading and on my own back testing, right, is I'd rather wait, right, for the first leg, right, to close below the 13 EMA, and then I'd love to see a move back above the 13 EMA. All right, so as you can see right here, the first leg, you might consider this as a first leg and this is another leg, as this is a multi-day formation. But as you can see, if you had your stops above, you would have been stopped out. So to filter this, right, rather wait for a close below the 13, close back above, and then wait for the stops to be hit. It is much safer for you to enter when this happens, right? So as you can see from this area, all right, now if we look at this from a clean chart, right, remember I always like looking at this from a clean chart. So if we look at this from the daily, this is where we had this coming off, as you can see. All right, this was once an order block to the upside, as you can see, and that was broken, right? So price got back to that area, and I loved how price got back to that area with the 3 levels of rise, right? 3 levels of rise. So that was a confirmed peak formation. If we looked at the TDI, one thing we can also identify when this happened, right, I mean, we had the second leg being issued right here. We can also identify the relative strength, right, to to the downside. As you can see, signal line was back inside the bands. We can also see a move at this extreme level, and then we had that green line back below the market baseline, which is this yellow line. So this was a retest of that market baseline when this went back below it, and that was our second leg. Right, so from this we can identify the first level push down. Right, so that's level 1. Right, we also identified another day of drop, right, but not really something that I would call a sustained run or a sustained drop. And then we can also see the last push, which was given on a Thursday. So when we analyze this is what we had seen, right? We had identified 1, 2, 3, and we're expecting a reset at this level right here. And as you can see, that is how this played out, right? But now I'm going to talk about what most people would expect after a peak reset. Most people would expect the market. So in this example, let me clear this up. In this example, we had a peak formation, 1, 2, 3, right? Peak. We'd expect a reset, right, depending on the market structure and the market conditions. And what we'd expect after this reset is 3 more levels of drop. Right? That is the reason why we call this a reset. But now, if we look at this is what happened. This did move down to our target, as you can see, right? This did move down to our target, but we could only identify 1, and we could identify another push as we got into this 800 EMA, and then we had another peak formation, right? So these are the most common mistakes that people make when it comes to holding such trades and observing the market structure. Now, to make this easy for you, if you're going to be counting your levels, it is better to always understand your higher time frame, right? Always understand the higher time frames. Now remember, our goal is to trade in line with banks, is to trade and think like a bank, right? So an example, right, or an explanation on how we can identify such, right, because we would love to follow the footprints, and how banks make money is by filling their orders and of course hitting your stops, right? But I'm going to show you a very simple example of what you can identify when counting your levels or when trading the market maker cycle. And an example would be something like this. Once you identify a burst in price, this shows that this was an entry for banks, right? Because it shows you the burst of price. It shows you how price moves away from this area aggressively. That should say a lot, right? That should definitely say a lot. So how we want to trade this is we need to understand that when that happens, all right, we have unfilled orders at that zone. All right, we have unfilled orders at the zone, and what we'd love to see is price slowly moving back, because remember, the aggressive moves that we get here, right, will cause a lot of panic in the market. And I'm sure you've done this yourself, where you see, you know, maybe you've been losing the whole day, right? You see the burst in price. Most people would find themselves entering somewhere here, right? You find scalpers, and you just find people who cannot wait for a setup, or, you know, have FOMO, and you find them entering at such areas without a stop loss, by the way. All right, some do use a stop loss, but as this happens, remember, would love to see a move back. All right, now this move, right, is actually thrown in there to hit your stops. All those people who jumped in here, right, all those people who jumped in here are being stopped out by this move. Remember, for trend traders, this is a type of compression back to the order block to fill those orders, right? So you need to understand that, and understand that this will, you can also now make use of this understanding when counting your levels, right? So this is just for retail traders, right? Most people will be going long, because technically this would be an up phase. You will find your trendline traders throwing their trend lines, but this move, right, is for banks to come fill the orders that they left here, right? That is the reason, that is how we can identify that, by these aggressive moves, and we wait for price to come back at this area. Now, understanding this, right, can definitely increase your trading when trading the market maker method, or by understanding the cycle. Now, if we can look back at this, right, as I said, understand your higher time frames. If we move to the H4, this is what we would see, right? And I think it would make more sense on a clean chart. It would definitely make more sense on a clean chart. So from this peak formation, what we can see in the H4 is 1 week of drop. That is 1 week of drop. But within this 1 week of drop, we can see push 1, we can see another push, and we can identify the last push, pull back, and the dealer ended the week. But as the week began, we could there was hidden base here. We had a burst in price. Now I want you to observe this imbalance right here, this imbalance. Now for most people, right, who would have been trading this, right, without understanding that, you would have done a lot, or made rather a lot of mistakes, right? Just because you thought this was a reset and this is level 1, level 2, most people are going to find themselves trying to sell here. Most people are going to find themselves trying to sell on that 50 EMA. Some would have even tried to sell on this 200 EMA. But by understanding that this area, that burst of price, says a lot, it should speak to you, right? There is unfilled orders at this area, right? There is unfilled orders at this area, and as the dealer goes to that area, a lot of traps will be issued. So as you can see, we're at a resistance level right here, right? A resistance level. Most retail traders would have probably seen this as a support area. As you can see, support, right? If you zoom out, I'm sure the left can give you some information to make you believe. I mean, you'd call this a very significant area. You know, I've seen people talk about that. So most people would have done a lot of nonsense right there, right? Just based on, so I don't really care about previous support and resistance. Honestly, we're dealing with order flow, we're dealing with the current trap moves that are being issued by the dealer. So if you zoom in here, you can see that, you know, there was a lot of people who got trapped here because, of course, knowing how a lot of people trade, they would have tried shorting this area, having their stops above this area, stops above, stops above, stops above. So you can imagine the amount of stop losses that we hit, right, just above this region. But by you understanding that these orders have to be filled, you will not fall for this manipulation, right? You will not fall for that. So as you can see, price then went back to that area, and then we had another push down. So when counting our levels, you need to really understand that there will be variations to the theme, right? But you also need to understand what is happening, because look at this. We had 1 week of drop, not really much of a false move week beginning. We just dropped into it, right? This will happen a lot, and that is because of this 13 EMA, a trap above 13 EMA end for our time frame. We can also see the 50 EMA at that zone. But if you can understand that we have an area where there is unfilled orders, even though you try scalp, or if you're an intraday trader, you will know when to hold and when not to hold. All right, guys, I hope you've learned something from this. Do go and back test this, right? If you're new here, don't forget to hit that subscribe button, leave a like, leave a comment, and also you can also check out our free Telegram channel. Find the link in the description below. And please note, the only way you can join our Telegram channel is by clicking the link in the description below. Any other channel that is out on Telegram is not owned by us, so make sure you only join the Telegram channel in our description.